Nós temos o prazer de estar aqui com o nosso presidente da nossa associação, o Eduardo Amaral, que nos dá todo o apoio aí para poder promover os eventos, tanto os eventos nacionais como os internacionais. Queria fazer um agradecimento especial ao Léo, ao Johan, por viabilizar esse momento tão especial aqui na nossa associação. Eu vou passar a palavra aqui para o Eduardo, para dar boas-vindas a todos, né? E aí a gente já começa o nosso evento.
Ok, né? Bom dia. Good morning, everyone. I'm Eduardo Amaral. I'm the president of Association Industry of Passing Ports. I would like to thank you all for sharing time and knowledge. Also, I would like to thank you, my great friend here, Larry, a good lawyer, support us across this meeting live. I hope you enjoyed the time. We always have the open door for this kind of collaboration. Thank you all for sharing, for a collaboration. We are the association working with this collaboration because you increase our knowledge and we support our passing complex port and enjoy the time. Larry, thank you. Carlos, our leader of our forum, thank you too. And enjoy the time. And I hope the time it's productive for all of us. Thank you.
Thank you, Eduardo. It's nice being here, and thank you for the invite. Always good to see you and talk with you. And of course, you are a good friend of mine also, and we are always happy to receive this kind of invitation to come here to speak about shipping and shipping trends. Much for, of course, to all the companies over there in Pecém, also in São Gonçalo do Amarante. So it would be a pleasure for us to have a person. We will have Johan here from Youngship Brazil. We will have a lot of speakers from other Youngships also. This event is together with Youngship Turkey, Youngship Dubai, Youngship Venezuela, and Youngship France also. So thank you all for participating and being here and to accepting our invitation to be here also talking about shipping trends. And thank you all that are from home listening to us also. I will give the word now to Sinem. She's the president of Youngship Turkey. She will introduce all the speakers and be the moderator for today, okay? So Sinem, the word is with you. You can start, okay?
Thank you, Larry. Thank you for the amazing event today. I'm really excited to hear the comments of all the other speakers. And yes, as Larry said, we have 4 Youngship together with us: Youngship Dubai, Youngship Turkey, Venezuela, France, and of course Brazil with us. Unfortunately, Youngship France, Fatima couldn't join today. So we will continue with the rest of the 4 other branches. And yes, the first speech that we will give to Johan, who's from Youngship Brazil. Johan, perhaps you would like to introduce yourself briefly and introduce which topic today you will talk about.
Perfect. Thank you, Sinan. Morning, everybody. My name is Johan Luporini. I'm the shipping specialist for Companhia Siderúrgica do Pecém. For our friends who are from abroad, we are a steel mill here in northeast of Brazil. We are producing 3 million tons of slabs per year, and I'm in charge of the raw material chartering and shipping control. So we are talking about 2.5 million tons of coal and 4.5 million tons of iron ore a year. About 35 ships in coal and around 50 baby capes per year on iron ore. And I will talk a little bit about the dry bulk freight market, focus on the Panamax segment. I would like to thanks for the opportunity and also welcome our friends from Turkey, Dubai, and Venezuela. Yeah, I have a little presentation here to help you guys have a better picture of what I'm saying. So just 1 second. Okay, so I split it in 3 topics. When we're going to talk a little bit about the freight costs, what to expect on the near future, and a little bit of the dry bulk market outlook on the historical data we have. So 2020 was a very different year from our perspective, as we have the COVID epidemic. So basically we had China locking down on end of 2019, being followed by Europe and America and Brazil later. I think Brazil, we started the lockdown in March, Europe a little bit before, maybe January, February, I think. So the freight levels for last year, they were totally different from the average. Normally we have a very, very bad Q1, being a little bit stronger on Q2 and Q3, and finally hitting on Q4. For last year, we have the opposite. We have Q1 and Q2 on a very bad situation. Afterwards, when China started recovering their economy and opening again, we saw a rally on the beginning of second semester, which was increased later on for the beginning of Q4. And then for this year, we saw that the balance between the demand and the offer of sea transport was totally broke down. And then we can see here in the red line how the market situation is now. We are hitting in March 22 this year, we hit a 10 years high, which we already passed by on 30 of June this year. So we were seeing that this year maximum on Q1, we have a vessel being traded at around $24,000 per day. And now end of Q2, the same ship is being traded at 40 or 40 plus per day. So we have a higher peak of 65% in just 1 Q. And when compared to same period of last year, we are talking about over 200% increase. Yeah. The freight per ton on the Panamax route for Atlantic, which is the one we here particularly are using more. We used to be paying roughly $12, $13 per ton 1 year ago, and now we are paying $34, $35 per ton. So we are seeing an increase of 150% in 1 year. On Q1, the maximum went to 25, so we already saw a 35% increase in these 3 months. So as we can see, the market is totally unbalanced. Ship owners are laughing, having their beers and happy, but for charters being a difficult moment. A quick reference from Brazil to China, the same Panamax is now being traded at around 70 or plus dollars per ton. Yeah. On the moorage side, which is also very important, especially for us in Pecém, as we share our coal berth with 2 other companies, so we need to be very, very time assertive. So our demurrage rates that we were seeing around 12, 13, 15,000 last year run up this year to 45,000 a day. Amazing, 190% difference from last year. So the main reasons behind it, it's of course the strong recovery the world was facing. So most of the industries were trying to build up their stock levels, which were affected last year by the lockdowns. And also the change of supply for coal and some other small commodities like nickel ore and others that China used to buy from Australia, and they start buying now from Russia and United States. So we added a lot of ton miles on these trips. So basically we are taking capacity from the market when we do that. On the other side of the table, we have the bunker prices, which they account, depending on the route, they will account for 20-30% of the freight costs, occasionally a little bit more. And they escalated in 1 year from around 310 per metric ton Gibraltar for the very low sulfur fuel, now to 543 on end of the Q2. So a surge of 75%. So this is also helping to put some flame on the actual market levels. Here I would like just to point out for you that we have all the segments here, although I'll be focused more on the Panamax, but we can see that this is not affecting only Panamax, but all the size of ships on the dry bulk. We can see Supramax and Handy all the way up, Panamax also, Capes also high, although they have a little brief between the beginning of Q2, but they are already getting stronger again. So this situation is not something exclusive for Panamax, but is affecting the market, the market as a whole. So the 1 million question now that everybody wants someone to ask to answer, but nobody wants to answer it because it's difficult to predict, and anything we can say now can be a big, sorry for the word, a big bullshit. But we saw China growing 18.3% GDP on the Q1. That's their historical number now. And on Q2, although it was not announced yet, we are expecting something around plus 80%. Although it's a good number, we see a 50% drop from the Q1, which indicates that the pace their economy is recovering is not as fast as we thought it could be on Q1. And China is the driving force of the world. So if we have in mind that not all countries are fully recovered yet, and they are economically attached to China, this will also reflect to their recovery. Sorry for the words. Now for Q2, we have the summer in China arriving, which tends to reduce the pressure on the thermal coal consumption. So this will align with their hydro and solar power generation. So their dependence on thermal coal shall reduce. This shall relieve the pressure from the freights, but not much to go back to the levels of a few years ago or last year. If we see anything, will be just a brief on the numbers we saw on the peak of Q2 now. Yeah. The future price for both iron ore, coal, and freight are dropping for the last few weeks. And the China iron ore imports for June were the lowest levels in 1 year period. So this indicates also a little, a small reduction on the pace of China economy. Again, a reduction from what we saw on the maximum Q2, when the higher of the Panamax were hitting $45,000, $50,000 per day. Doesn't mean that we are gonna see a reduction to the levels we were seeing last year or on the years before. Yeah. The Chinese GDP for this year is expected for 80%, plus and around 5% for next year. Yeah. When we analyze the dry bulk fleet, we have a small growth for this year of 2%, and for 2022, 1% expected. And 2023 onwards, we are going to start seeing a decrease of less 1% for 2023. And this will, of course, be on the ship owner side, as the balance will be kept on their side instead of on the charter side, unfortunately. For us, good for us that are paying the bill, and good for them that are collecting the money. So, although it's very difficult to predict anything right now, I don't see a very optimistic market rate for charters. And when we analyze here on the top slide, this is the historical data for Baltic Dry Index. Although we are very above the average of the last 10 years, we see room for improvement on freight rates, as it was observed in 2003, 4, 7, 8. These levels, where the market will hit on these levels will depend of China economical growth, and of course if ship owners will get greedy and start ordering new buildings for 2024 and onwards delivery. So for the near future, although I expect a little bit of reduction on the rates for the next month, maybe, I don't see a very good numbers on the future for the chartering side. For the ship owner side, they are now probably having a beer and talking about that on the pubs with the money full on their pockets, which is good because they've been suffering a lot on the last few years. But for us that are bringing the ships, we need to be very, very assertive on our operation, especially to avoid the demurrage rates. Otherwise, it will just break down any plan that charters are doing for their costs this year. I'm not sure about the timing, but for me, I think my presentation is done.
Yes, if there are any questions, we can take questions to Johan right now, or
you can write in the chat if you want.
Yes, either in the chat and later on after the speakers complete their speeches, we can take at the end all the questions. So if you have any questions, please feel free to raise your hand. Otherwise, we can move with the next speaker and we can follow the questions in the chat. Okay, for now, I don't see any raising hands. Perhaps we can take the questions at the end. Thanks again, Johan, for your presentation.
Thank you all for your time.
Mert will also speak about the dry freight market. Perhaps he can first introduce himself and then the topic that he will talk about. Thank you, Mert.
Thank you very much. My name is Mert Egan. I'm the head of shipping in Heidelberg Cement, Germany. But I'm based in Istanbul. I'm working for actually one of the companies of Heidelberg Cement, which is doing the exclusive trading, international trading of Heidelberg Cement. We are, as a company, we are trading approximately 25 million tons of cement and raw materials of cement. What are those? Coal, petroleum coke, blast furnace slag, cement, clinker, all types of materials used in cement industry. And I'll be here today presenting you as a complementary presentation to Johan's. I will be talking about Supramax and Handysize freight market in dry bulk. So I have a presentation as well. Mine is a bit longer than Johan, and I have further details why this happened like that, why the freight market happened like that. So if you don't mind, I'll be sharing it with you. Please let me know if you're not able to see. Okay, first of all, a small disclaimer. Although I'm working in Heidelberg Cement, today I'm here representing Youngship Turkey, and also anything contained in this presentation is my own ideas. They are not binding Heidelberg Cement. Of course, they are not binding Youngship Turkey as well, but any comments, any suggestions surely be considered only coming from me. First of all, shipping is a derived demand. What does it mean? It's a reason why shipping is a reason because the world trade is happening. World trade is depending on what? World trade is depending on world economy. And last year in 2020, we have seen a very drastic event which hasn't happened in the last 70 years. The world economy contracted by 3.5%. This happened the last time back in the Second World War. But another interesting thing happened in 2021. The contraction in world economy immediately changed the other side, and it grew by. It is expected to grow by this year by 5.8%. So that is a V-shaped recovery. We see a sudden drop in the demand, but we see an immediate recovery. Also, I want to underline one fact here. The world GDP contracted in 2020 mostly on service industry level. So the service industry is still yet to recover, but the production, the entire production is catching up so fast that the world economy will grow twice more than 2019 levels. As the world economy will grow, the seaborne dry bulk trade is also going to grow. So we expect 2020 closed with only 1% drop in the seaborne dry bulk trade. Why? Because, as I said, service industry was the main contributor of contraction in the world economy. But commodities were still traded. Grain, for example, still traded. You can see in the table here, grain trade was even growth by 6% in 2020. So in 2021, we expect the world seaborne trade to grow by 5%. Why it's growing? Because the countries are opening. Why it's growing? Because there are a lot of stimulus packages in the economies. Joe Biden is elected. He came up with $2 trillion economic package in US. China also announced a lot of stimulus packages in their economy, boosting the exports of steel. Johan would verify me. And also many countries, including European Union, US, they printed money because they have to feed their people who are not able to work, who are not able to go to work. So all this money created an inflation. People with a lot of money in an atmosphere where the interest rates are not high enough, they need to spend. All this money is flown into commodities market. People started to buy houses. People demanded more infrastructure. Countries invested in more infrastructure, all of which returned into commodities market. More iron ore demand, more coal demand, more cement demand resulted in this picture. On the other hand, the supply side, as Johan mentioned, in the last decade, last 10 years, the shipping market was very low. The freight market was very low. So the ship owners were barely covering their fixed costs, running costs. So it was a risky business. Why, if you have money, why to invest in shipping? The freight rates are low, so they didn't order new ships. And all of a sudden, we came to a situation where the demand is rising sharply, the commodities are rising sharply, but the supply is not at all rising. Actually, the growth is, as Johan said, just above 2% on the supply side. And even in 2022, it will be 1% only. And I'm afraid the supply is not able to catch as fast as demand because shipbuilding industry needs time. If you order a new ship today, you will get it delivered by 14, 16 months at earliest. So you have a lagging effect. That's why we expect the supply and demand equilibrium this year will shift it to demand side. So demand will be more excessive than the supply. I want to mention here as well, even if everybody starts to order now, most of the shipbuilding capacity is occupied by container vessels. Some of you might have known, I'm sure known, there was a lot of disruption in container industry as well. In the pandemic times, the empty containers stayed in the destinations, US, Europe, and couldn't come back to China. And China was in huge demand to export more, so they all covered these empty containers. There was a huge demand for empty containers, and all of a sudden the container freight rates picked up by 6-fold maybe. So when this has been seen, people in the shipping industry, they started ordering container vessels. So much of the shipyard capacity is occupied by container vessels at the moment. So it needs more time actually for new building ships to come. When we look at the fleet growth in segment by segment, we see that the lowest fleet growth is in the handysize. It's going to be less than 1% growth. But remember, the world seaborne trade would grow by 5.8%. Similarly, Supramax also the second. I think it should be around 2% growth rate. So that would bring us the utilization ratio higher when the fleet growth is lower. So handysize utilization ratio will be approximately 90%. What does the utilization ratio mean? The ships are already occupied with so many cargoes. They don't look for cargoes. I mean, if you add one more cargo, the ship owner has to choose among the cargo. If you add more cargoes, the ship owner has more choices, so they will increase the prices. So essentially, we are essentially here with 90% fleet utilization. So we call this as a boom zone. So there is no limit what ship owner can ask here. Why? Because they have already cargoes. They already booked COAs. They have already booked cargoes 2 months before. If you give them another cargo, they will still rate you, but they will rate you astronomically. That's why we see a lot of escalation in the market, especially after February in 2021. So what happens in this situation? The ship owner chooses cargoes, as I said, and they avoid piracy zones, they avoid dirty cargoes, they avoid difficult charter party clauses. The power is with the ship owners now. In addition to difficult situation of supply and demand, another disruption happened. China is politically conflicting with Australia, and they are trying to reduce all sorts of economic relationship with Australia. The main commodity affected by those is the coal, both thermal coal and coking coal. So in the past, Australia-China is approximately 35 days duration with a Capesize or a Panamax, doesn't matter. So in the past, these cargoes was coming from Australia. Now, with the big ships, now these cargoes are coming from Indonesia, smaller distance, but smaller vessels. So instead of having one vessel, 150,000 tons from Australia to China, now we have 3 vessels needed for the same commodity, same amount of cargo to be shipped between Indonesia and Australia. So Indonesia and China. So that created an inefficiency in the vessels fleet. Another thing is the containers. As I said, container freights increased by 6-fold. So some of the cargoes that are carried in containers can be unitized, can be shipped in smaller parcels, they turn their way to smaller handies. So this also put extra inefficiency in the market. Another thing, China started to export a lot of steels, comparatively, I think 25% compared to last year. This also affected the Pacific market a lot. So we, all of a sudden, we saw a very imbalanced market, as Johan said, and the rates increased by $19,000-$20,000 year to date for handies, and just about $20,000 year to date for Supramaxes. By the way, the spot rates for these vessels are much higher, as you will see in the further slides. Another inefficiency is the crew changes. Because of COVID, not many countries are allowing crew changes, so the ship owners have to deviate. They have to lose time. So if the ships lose time, we will need more ships. And the last inefficiency was port congestion. In Brazil, grain season in Brazil, Q2, there was a lot of congestion, so many of the ships were occupied there, as well as the River Plate Delta south of Brazil. But now this port congestion shifted to China, so a lot of ships are waiting in China, which is creating an inefficiency. So to put a similar scale, Johan said, we are seeing the rates more than a decade high, 11 years high. The last time we see the market like this was in 2010, and it was about falling. But now we have a drastic change. The market is always in an upward trend due to these inefficiencies and imbalance of supply and demand. Another thing, the seasonality. Normally, first half of each year is seasonally lower in freight rates for Handysize and Supramax markets. But in this year, because of the recovery in world economy and the world seaborne trade, we have seen the first half jumping compared to last half of the last year. And normally, again, if the seasonality continues like the same, we should even expect a higher second half in 2021. So we may see another jump. This is a scale after the COVID pandemic. The Supramax market increased by almost 3 times, starting from the COVID restrictions up to now. There was a slow correction, small correction in April, around the Easter time. That was around 16%, but then the market shot up again afterwards. Similar graph is visible for Handysizes. The growth is similar, and similar backwardation happened in April. But when the ship owners see that this is not temporary, the increase kept on going. Coming to oil and bunker prices, I think Johan said it's 30% of the freight rate, but for Handysizes, as the daily time charter rates went up, the proportion of the bunker in the freight went down. I think it's around 20% of the freight rate of Handysizes and Supramaxes. So we have seen the oil prices going up. Why? Because in 2020, flights were not there. International flights were not there. People were at their homes, no car usage, nothing. So the oil demand was much less. Now the countries are open, economies are open, oil demand is recovering. We are seeing the Brent oil prices around $75 per barrel, and IFO intermediary fuel oil prices are around $550 levels in Gibraltar. Coming with the FFAs, Baltic Forward Freight Agreements, because the market has seen in the last 2 weeks a flattening phase, we see the upcoming 2 months are in contango with the spot market. So it's if you ask for next month's freight, the ship owners are likely quote you higher freight rate for upcoming 2 months. But if you ask for a freight for October onwards, it's likely to get discounted freight because the FFAs are showing a backwardation afterwards. 2022 is also showing a backwardation, but will the physical market in reality be like this? I don't think so. It's basically a risk selling for 2022. So if you purchase 2022 freights from now, you get a discount, yes, but the ship owner is also selling the risk. But you would still have a good deal, I think, if you buy FFAs or if you buy COAs for next year, because the supply situation will not change. There won't be new ships, and I think the market will be high. So conclusions, very briefly. By looking at the basic supply demand, the world economy is growing, recovering from the pandemic. There's too much money in the market. Inflation is there. Demand for commodities are high. And on the other side of supply, it's very critical levels. It's not able to go up drastically. Also, we expect the market to be strong. Maybe some occasional drops can happen. Do we expect the market to go up much higher? I don't think so either, because there's a saturation point. Some of the trades are not able to be happen because of the high freight rates. So the saturation point is also close, but will it go down too much? I don't think so. So my opinion that the freight rates will remain this range, maybe 10-15% up, 10-15% down. But the downside risks could be the risks that could change the commodity demand, the demand on the commodities. So that can be interest rates hike, that can be COVID waves, that can be geopolitical risks, or China's potential action, as they are constituting more than 50% of the dry bulk seaborne trade in our world. So with this, I thank you very much for your attention, and I'll be happy to answer the questions at the end.
Thank you, Mert, for the great introduction and the great discussions. If anyone has any questions, please feel free to raise hands. If not, we can have at the end Q&A topic where you can address your questions to the speakers. So I give you a minute to push the raise hand button, and if not, we can continue within the next speaker. Okay, for now I don't see any raise handing. So perhaps we can continue within the next speaker. Thanks again, Mert, for the great discussions. Perhaps we can come back to your topic later on during the Q&A session. So the next speaker will be Amit from Youngship Dubai. Amit, are you here?
Yes, Sainem, I'm here.
Great. Amit will be talking about diversity in shipping. Perhaps, Amit, you could briefly introduce yourself and then start your discussions. Thank you.
Thank you, Sainem. Firstly, I would also like to thank Joan for giving really detailed knowledge about this bulk trends and everything. So before starting anything, I would like to thank Youngship Brazil to create this kind of platform where we were exposed, and it really feels good. And now coming to my introduction, this is Amit Singh. So I'm basically from Nepal. Currently, I'm employed here in Dubai with Noah Ship Management. So in this meeting, I'm also representing Youngship Dubai. Okay, so firstly, I would like to introduce my company, Nova Ship Management. We are basically technical managers for the vessels, and we work as an agent in behalf of owners, where we handle the vessels on all shores, and we keep vessel moving. So that was for my company. So now today I will be speaking regarding diversity of shipping. Though it's very simple, it's very short, but I would like to just freshen up everyone with the shipping trends, and I know everyone is aware about what's going on here at this moment, at this pandemic. So I would like to just be brief on shipping. How does it works? What are the things involved in shipping and all? So I also have small presentation where I will be sharing it now to you all. Please let me know if you will not be able to see it. I hope everyone is able to see my screen.
Yes.
Okay. Okay, so sorry for the delay from my end. So diversity of shipping. As we all know, all companies conduct their business differently. Like the main goal is regarding managing how resources are acquired, stored, and transported from one place to the final destination. And like ship earned by its freight, by carrying and discharging of cargoes. Industry demands shipping business is conducted safely for the respective charterers and the crew, safeguarding the environment. So here we are going to discuss, or I'll be discussing commercial market. First, that's first one. Second one is cargoes like oil, chemical, and gas. As my colleague there had already shared their opinion regarding the bulk cargoes and dry cargoes. So third one is regarding how does we get the cargo, followed by how do we prepare the ship for the cargo, which is one of the important topic as well, and industry and company safety as well as security, and in the issue going on the industry at this moment. So coming to commercial market, what is commercial market? Like when we're speaking about tanker, the rate, the amount ship owner is paid per day, which is between the demand and supply from the owners as well as from the charterer, from the managers, where the tanker market has two main drivers, which are like oil demand from the consumer as well as oil supply from the trading companies and the storage. Like as you can see, at this moment, we have types of cargo ships, like on which we are just looking onto oil tankers and product tankers, as well as the chemical tankers, and just followed by other types of ships like gas carrier, containers, bulk carrier, and obviously the size of the ship, which also plays one of the important role, and which has the greatest influence in the freight and the logistic of the shipping lines. And as you can see, the total ship is a statistic about the total ship by the January of 2020. Approximately there were 55,649 ships which were active by this time period. And now coming to how does we get the cargo? How does a charterer get a cargo? For the oil companies and all oil majors and energy trading companies have access to the refineries. Another one is broker working on behalf of the client has offer for the cargo transportation. broker approaches owner, and if the cargo is of interest, voyage estimation is conducted. Factor considered vessel readiness, location of vessel, tank cleaning preparation is one of the process that's carried out by crew on board. Cargo quantity, bunker consumption, and the charterers. Brokers who relies who will, broker who will relay in indication to the charterers, and if the interest of the charter will request a frame offer and approval for the load port, discharge port, vessel certificates, voyage order received, etc. So, tank preparation prior loading a cargo, which seems very important. Like where after getting like information from the charter, where the crew on board they prepare a tank in the tankers. Like tanks are inerted, they are isolated and made ready for the loading operations. Like in the same way, the consideration like owners, which are responsible for preparing the tanks, independent inspection by surveyors, owner, who is also responsible for the safe carriage of the cargo and delivery of the cargo, required component like experienced person for the operation, especially on chemical and gas ships, in which gas and the chemical cargoes seems like a very critical cargoes. Time frame for cleaning can be several days to many weeks on the tankers, depending on the last cargo carried and the next cargo loading. Commercial pressure upon the crew on board, headed by the master to complete the job, and the workload upon the crew, like they had to prepare tanks, they have to prepare a vessel within 18 to within the 18 to 24% on board, in which also they have separated with their differently with their designation on board, while they need to prepare the tanks in very short period, because time is money obviously in this shipping trend. So the more time they are losing, the more money they are losing, as well as work and rest hour and the fatigue to the person who are involved, or to the person who are like directly deployed to prepare the tanks. Health issues, like especially while carrying this on board oil tankers, gas carrier, health like is one of the major things that to be taken care of. Okay, so after this one, so coming up to legislative safety, as we know, safety first, which need to be taken very seriously on board. For the safety, we have like different amendments from IMO, in which SOLAS, which has its own which was introduced in 2014, MARPOL, which was introduced in 1973, and which was amended on 2nd October 1983. ISM code, which was amended from 1st of July 1998, Maritime Labor Convention, to work on the welfare of crew on board, which are regarded as 4 pillars of safety and security for the quality shipping industry. Okay, so moving up to next slide. So what are the safety requirements for this maritime industry? Like international safety management, ISM code, policy and procedure for safe operation, safe working environment, assess all identified risks to its ship and personnel, scope for continual improvement, achieved by internal audit, which is carried out by first party by the company on its vessel, external audit by the third party, like by the class surveyors, and commercial assessment like second and third parties. So after that, flag state inspection, which complies convention and legislation, SIR inspection, oil measures inspection for oil tankers, and we have port state control, which also plays very important role on compliance of safety on board. So company requirement for safety. A particular company should develop a safety culture on shore as well as on board to promote the company values, set its own perception, everybody doing its right, leadership, office in which office involvement from the top, from the beginning, being an example, like carrying out its own responsibility, motivating seafarers, since working on board is not easy. So it would be best practice if company would directly involve or and take part in like the different activities and all in which crew on board will be motivated. And while recruiting a crew, if they can make sure that they are recruiting well-trained personnel while the shipping trend is going on, the people on board, if the opportunity is given for them to train, safety training visit 10 day each year by a personnel from office, like carrying out internal audit in that way, and carrying out a seminar with the personnel on board, and to make sure risk assessment is carried done prior carrying out any type of work on board the vessels. So one of the major trend on the shipping is security as well. So companies should give a proper precaution on the security of a personnel on board, security of the property, security of the environment. In that way, so as we know that shipping is very high risk business, shortage of component seafarers, especially in this COVID situation, like we are having very tough time finding a crew who is willing to go on board and spend some time. Even after finding a crew, it's very hard because many of the countries they have restriction, they don't allow crew changes and all, which has like very big pressure on the owners and on the manager side. Commercial and regulatory pressures, more frequent inspection and admin tasks, more from everyone, stress compounded when transiting high risk areas, and in that way. So coming to end, uh, does maritime industry needs to improve diversity in the workplace? So yes, obviously, maritime employer and the employee would be benefited if a diverse working environment is created. However, a preliminary survey finding hints that there is still plenty of room for improvement for the maritime industry. As we know, organizations with a diverse culture are 2 times as likely to meet or exceed financial targets, 3 times as likely to be high performing, 6 times more likely to be innovative, and 8 times more likely to achieve better business outcomes. That is a reason why it it would be a good environment if everybody would put their potential to make the shipping industry a diverse industry. So that's it from my side.
Thank you, Amit, for your presentation. It was really interesting to hear your point of view about the diversity in shipping. And I would like to go immediately to the next speaker, who's from Youngship, Brazil, Argel, together with us. Argel, we cannot see you right now.
Hello, good morning for all of you. Good afternoon for guys on another side of the Atlantic.
Hello.
Can you see me now?
We can see you. Argel, could you please briefly introduce yourself and start the discussions of your topic? As far as I'm concerned, you were talking about the crude oil market.
Yes, of course. So first of all, thank you very much for this invitation to all of you. This is my first webinar at all, so I really appreciate. My name is Argel in Spanish, but as you can see, English sounds better like Argel or Argel. So I am merchant marine officer with 8 years of career on board tankers, mainly in the LPG industry. And since the beginning of this year, I founded a startup, small shipbroking company named AMB Shipbrokers, just in order to give consulting in the marine field and shipbroking service in this domestic market. Please let me know if you can see it.
Yes, we can see.
Okay, so let's go. So I would like to share with you the current freight market, specifically the tanker sector. Focus in the crude oil. So I will be speaking about the market in the VLCC, Suezmax, and Aframax in some trading routes. In the first slides, you can see how the markets evolved from December 2019 till now. The freight level is expressed in world scale in around 3 voyages for VLCC. So you can see the 3 lines. So there are 3 routes, on which one the blue is the Middle East Gulf to China, the red one the Middle East Gulf to US Gulf via Cape to Cape, and the orange one is West Africa to China. So you can see in the graphic how the market since the beginning of the pandemic turned bearish due to the lockdown in almost all the world. However, you can see, you might wonder, why the market turned bullish in the period from March to April, if still we were in lockdown that time and this moment. So we have to remember that last year we could testify a mixture of ingredients that made possible the oil coming from US, I mean the West Texas Index, went down to sub-zero levels. So one of the factors, of course, that the lack of was the lack of demand for oil, and another one was the excess of offer of oil due to the conflict between the Russia and the Saudi Arabia, where both of them flooded the market with oil, and therefore the oil price turned very cheap. In consequence, suddenly we can see how the demand for oil increased, but not for legit use. When I say legit use, I mean like for normal use of the commodity, like for factory, cars, heaters, and so on. Instead, it was for storage and for future speculation. Then, of course, the demand of large crude carriers, such as VLCC and Suezmax, coming as well. And that time, so the charter rate came from $30,000 per day to $300,000, even more in some fixtures, due to the pandemic, for the speculation, what I mentioned before. Now, at the end of the graphic, you can see freight level in the spot market around world scale between 18 to 30 So the time chart equivalent for the route West Africa to China is about minus $1,800, which it means that with fixed cost of operating at VLCC, the owner are losing about $25,000 per day. That represent for the respective route of, let's say, Lagos in Nigeria to Qingdao in China, about 1 month voyage. So it means $750,000 for one leg only. So you might ask, why do owners of ship operators accept such fixtures? One reason of why the time chart equivalent, in my opinion, is in negative zone, because they are calculated based on current fuel costs in main fuel hub along the road. In the same example, Lagos to China, they can calculate the time chart equivalent taking the price of the fuel, let's say Cape of Good Hope or Singapore, for example. But maybe the actual time chart equivalent is a little bit higher. Maybe the ship operator bought fuel by future contract where the price was cheaper than now. As Mr. Metz said before, there was a contango, yeah, the future market. So maybe the current freight level allow the ship operator and owners to earn some profit. We don't know it at all, the actual bill for each individual owners. So, however, it doesn't mean that ship owner can accept to lose earning during one fixture, but you know for sure the usually is during a repositioning from one back hull looking to a front hull or a voyage to port near to a dry dock or some owner interest, but accept negative time chart equivalent in the long term, I think is no acceptable. It's no good idea. They are losing money. So here you can see this slide for the Suezmax freight market. A Suezmax vessel able to carry 1 million barrels. For these two routes, West Africa to UK continent, Black Sea, Mediterranean. So you can see how these two routes follow the VLCC market trend during the pandemic period. The same peak and then go bearish till now. So for instance, the current freight level is surrounding the world scale 50 with a time chart equivalent of $1,800 for the Black Sea Mediterranean. While the another route with higher freight, the time chart equivalent is calculated in minus $6,400 daily. Why? Because it's more expensive fuel in the AECIPP along the along the road on the red road, Black Sea Mediterranean. Conversely, you can see for the Aframax market that at the beginning of the pandemic for the Baltic, UK route and Caribbean to US Gulf, it became totally bearish. Yeah. So at this moment, generally, it's expected that oil demand normalizes on 2023. We have to remember that shipping market was a derivative demand and current oil demand is higher than previous year, but it's still lower than pre-pandemic level anyway. So I would like to share with you some conditionals. Same, I would like to give some disclaimer regarding the suggestion ideas coming from me only, for this presentation. So this is no professional advice, shouldn't take it like this. So it's an opinion of what I think any conditional that can change drastically the freight market in the oil sector. So in order to give you one outlook, so one of these is obviously the COVID-19 and vaccination progress, especially with the different variants arising around the world. In the pessimist scenario, hoping never happen again, we can see lockdown coming back and therefore demand for oil decrease. This can affect the market negatively unless speculation can evolve again as we saw last year, as just explained in the previous slide. Of course, wars. wars will affect the market, hoping the conflict in the Middle East gets finally over, but this would affect differently depending on the conflicts carried out. For example, if the Suez Canal is obstructed, we will see the rates increasing the road from Europe, Mediterranean to China, or from Middle East Gulf to Europe due to more mild tonnage required and therefore demand increase. But if the war affects an important choke point as the Strait of Hormuz, the oil supply by this area need to be found out somewhere else. And such a substitute place will see a considerable increment of their rates. Restrictions. So restriction imposed by one country or by several countries to one or another several countries, like we have now in Venezuela. So restriction, of course, will affect the market locally. So because, for example, all open tonnage that could be available for Venezuela is not available at all, because the most of owners are not willing to make business here and thus make the rate a little higher than near areas. However, if the restriction are eased by US the coming weeks, this could increase the rate in neighbor areas in the Caribbean just at the beginning. Cost. As the main expense of the shipping operation, of course, it will affect the market, but not directly. I mean, if you price rate to the sky, for example, ship owner will not have option to go to slow steam in the short period or lay up the vessel if demand for oil is not increased, because it will not economically profitable, the business in this circumstance. And of course, the fuel of the future, the new regulation regarding fuel, if it's becoming more expensive, green, cleaner, so new politics and development in these fields. What is required is use of new kind of fuel, not only in the shipping industry, but also in the daily operation of the economy. For example, you can see the electrical cars will reduce drastically the need of oil. You might think that, okay, yeah, the energy required to power in the car is taken by burning oil. I would say yes, but not all. There are countries such as Iceland, for example, when the energy came from non-fossil source. For sure, in the future will be like this, the most of the country, especially where the oil is very expensive. So, of course, the development in other sources of energy like LNG and hydrogen as new source will substitute the need of oil in the coming year and affect this market drastically. So this is my presentation. Hope to be short enough to all. If you have any questions, so please you can do it.
Thank you, Arher, for the great presentation. We have two questions. I would like to take them right away and perhaps later on to give the closing remarks to Carlos. So first, Ana Paula addressed the question. Actually, in the chat, I see that from Youngship Turkey, Mert had replied, but I would like to also address to other speakers. So Ana Paula is asking, all these difficulties and price hikes that are being presented may also mean some good business opportunities, in particular for the Brazilian market. I'll just leave it to the speakers. If anybody would like to jump in and answer, please feel free to do so.
Johan, maybe you want to add a few words? Let the question don't be there alone. I think he's away. But Anna, I agree. It can also mean opportunities for not only Brazil, but for every other nation. The high freight rates doesn't mean that it's too bad for everybody. No. Yes, unfortunately, the prices for end users are increasing, but it may be a good opportunity for the business makers importers, exporters to use these high freight rates to get advantage among the other countries. For example, the freight from US to Europe could have been higher compared to Brazil to Europe. So these kind of spikes and volatile markets can also bring their own opportunities.
Thank you, Mert. I jump and take the other question. Carlos is asking, what do Youngship think about viability for green hydrogen for implementation in the world? I saw also in the slide at last, Argel was mentioning this about. I also saw in the chat that Mert had commented on Carlos' question. So I would like to ask two other speakers, Johan, Argel, Amit, do you have any comments on the Carlos question?
Sinan, for this one, I will need to pass. I'm not very familiar with green hydrogen. If Mert has anything to comment about it.
I need to get the first comment from Argel, if possible. If not, I have my own ideas I can share with you.
Argel, can you hear us? Would you like to comment on the question?
Yes, of course. Can you repeat the question?
Sure. Carlos is asking, what do Youngships think about viability for green hydrogen for implementation in the world?
So hydrogen is a fuel, Argel. How do you think it's viable?
Yes, now it's in development, this technology to using hydrogen as a new fuel, especially for cars. This is hydrogen into with oxygen into the cells, just exhaust water. So I think as a green energy, as a green source of energy, is very suitable in the coming future. Of course, just to substitute for fossil.
Max, any other?
From my side, I think it's going to come, but not in the near future, because the conventional engines we think of, they are working on a combustion method, as you know, and hydrogen is very difficult to store. So you have to have fossil fuels to create the combustion. We have seen some projects. One of them is ours. So we are developing a project in the short sea where the shipment will not exceed a couple of 100 miles. The ship will have a pressurized container, pressurized hydrogen with the container on board. Use this as a fuel in the engine. And then once they reach to the next port, they have to replace the container with a new hydrogen-filled container. That is taking, a bit of. It's a bit inefficient, let's put it that way, and the distances you can cover is very short. In the long run, ammonia is being discussed. Ammonia is a hydrogen carrier, so. You can use technically ammonia in the engines, but such an engine is not ready in the first place. And the second place, even if you have it ready, where you will find all the ammonia? The supply will have to be there in order to build such engines. At the moment, producing ammonia is a very carbon-emitting process. We can do it greener, green ammonia it is called, but only a few technology can do it. Some of the companies in Norway and Japan, they are investing on it. Let's see, but it will not be in the short term.
Thank you, Mert. So once again, I would like to say thank you for Youngship Brazil's invitation. It was great to hear all the discussions and listen the market trends in shipping right now. And I leave you the stage to Carlos to do his closing remarks. Thanks once again.
Thank you, Youngship. Great presentation. You talking about green hydrogen is in the state, and Ceará is developing in technology in electrolysis and in the blades, in the energies white offshore and electrolysis in the water in industry on the land and in the tanks next to the port. But thank you so much, Youngship speakers. It's good. It's great presentation. Is AECIPP, all empresas in Complexo do Pecém. Thanks so much. I change in Portuguese speaking. Sandrine, apresenta um evento que está sendo feito de logística aqui no Ceará, né, sobre logística do agronegócio. Você poderia apresentar? Eu queria convidar a todos. Hoje nós estamos em um evento patrocinado pelo governo do estado de Ceará, pelo Banco do Nordeste e o SESI, né, sobre o segundo seminário do Logística no Agronegócio. Convido a todos, um evento gratuito, está no nosso grupo do WhatsApp, e nós vamos estar fazendo também uma apresentação lá, como outros palestrantes aqui, como o Raul Viana, que está conosco, e outras pessoas. Simon, thank you in moderation in the presentation. Thank you so much.
Thanks for hosting the event and for the invitation.
Thank you, everybody. Muito obrigado.
Good morning.
Bye.
Thank you all. Have a nice day.
Bye bye, people.
Nice
Good
weekend
morning
to all. Tchau, tchau.
Tchau, tchau.
Tchau, tchau. Um abraço.